The US dollar has long held its status as the world's dominant reserve currency, playing a crucial role in facilitating global trade and serving as a symbol of economic stability. However, in recent years, concerns and debates have emerged regarding the sustainability of the US dollar's position as a global reserve currency. This video will delve into the various factors that contribute to the argument for a political collapse of the US dollar. We'll be examining the mounting national debt, trade imbalances, declining global influence, inflationary pressures, and geopolitical shifts. One of the primary factors contributing to concerns about the potential collapse of the US dollar is the nation's staggering national debt. The US has persistently operated with budget deficits, resulting in a substantial accumulation of debt over the years. As of today, the US national debt has surpassed $31 trillion, placing an enormous burden on the economy. The ever-increasing debt levels, coupled with a rising interest expense, could potentially undermine the value of the US dollar and erode confidence in its long-term stability. The implications of a large national debt are significant. Higher debt levels increase the risk of default or necessitate currency devaluations as a means of repaying obligations. If creditors lose confidence in the US government's ability to manage its debt, they may demand higher interest rates, leading to a rise in borrowing costs and a subsequent weakening of the US dollar. Persistent trade imbalances also contribute to concerns surrounding the potential collapse of the US dollar. The United States has consistently run trade deficits, meaning it imports more goods and services than it exports. While trade deficits alone do not necessarily indicate a collapse, the long-standing reliance on foreign capital to fund these deficits poses risk to the US dollar's value. Foreign countries and investors who accumulate US dollars as a result of trade imbalances hold significant leverage over the currency. If these countries were to shift away from the dollar, diversifying their reserves or reducing their dependence on the currency, it could weaken the dollar's global dominance. Furthermore, emerging economies such as China, with their increasing economic clout, are challenging the United States' position as the sole global economic superpower. As other nations seek to reduce their vulnerability to economic disruptions, they may explore alternative currencies or regional arrangements, undermining the US dollar's long-standing supremacy. Inflationary pressures and the Federal Reserve's monetary policy are additional factors contributing to concerns about the potential collapse of the US dollar. In recent years, the Federal Reserve has pursued accommodative monetary policies, including low interest rates and massive quantitative easing programs, in an effort to stimulate economic growth. While these measures aim to alleviate the effects of economic downturns, they also carry the risk of fueling inflation. Inflation erodes the purchasing power of a currency and reduces its value in the international market. If the Federal Reserve's policies lead to a sustained high inflation, it could undermine the confidence in the US dollar. Investors and foreign governments may seek alternative investments or currencies that offer greater stability and a hedge against inflation, further weakening the US dollar's position. Geopolitical shifts and the rise of alternative currencies also pose challenges to the stability of the US dollar. As geopolitical dynamics evolve, countries are seeking to diversify their reserves and reduce their vulnerability to economic disruptions. One notable example is China, which has been actively promoting the internationalization of its currency, the renminbi, also known as the RMB. China has established bilateral trade agreements that bypass the US dollar, fostering the use of the RMB in global transactions. The emergence of alternative currencies and the potential formation of new economic blocs could diminish the US dollar's importance as a global reserve currency. As countries pivot towards alternative currencies, they reduce their reliance on the US dollar, potentially hastening its collapse and altering the financial landscape. While the US dollar has long held its position as the world's dominant reserve currency, it is essential to recognize the potential risks and vulnerabilities that can contribute to its collapse. Factors such as mounting national debt, persistent trade imbalances, declining global influence, inflationary pressures, and geopolitical shifts all play a role in this discussion. While it is challenging to predict the future with certainty, policymakers must address these concerns and implement prudent measures to ensure the long-term stability of the US dollar and the global financial system as a whole. Failure to do so could lead to significant consequences, not only for the United States, but also for the international economy at large.